You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by CBOE Live Vol. CBOE Live Vol is the leader in equity and index options trading technology, providing professional and retail traders with the most sophisticated options risk analysis, compliance, and trading tools. CBOE Live Vol offers a broad spectrum of advanced trading technology, including the Live Vol X, next generation execution platform, and Live Vol Pro, the new standard in options trading front ends. Visit livevol.com for a 15-day free trial today. And by Russell Investments, the home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. It's Friday. The music just played. That means it's time for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. We took a bit of a weird twist this week with the addition of our quote-unquote 15th program, a bit of a silly look at the world of business. So check that out, the business show, a.k.a. the BS, as the cool kids are calling it, if you are so inclined. Also, our more recent edition, This Week in Futures Options, is going to go live in a couple hours on the network here today as well. So if you are so inclined, you like all things perhaps crude or gold or soybeans lately, they've been lighting it up, or of course treasuries with Brexit and everything else going on, FOMC. There's a lot of things to talk about on that show. Check out that one. Wherever you find your favorite podcast programs, probably the easiest place is, of course, theoptionsinsider.com. It's all right there in one easy location for you guys to stream and download till your heart's content. Of course, also iTunes, TuneIn, Stitcher, and so on and so forth. Also via our mobile app, which is available pretty much for any platform you can think of. And if it's not, let us know. We'll make sure it's out there for you. And while you're listening, while you're streaming, while you're downloading, while you're doing whatever it is you do, make sure you send in those questions, those comments. We love to hear from you. Got some questions with complete with charts and graphs today. I love when our listeners really go deep. That always makes it fun. And of course, you can also, should I forget, you can also join us live if you are so inclined. Every Friday, noon Central, 1 p.m. Eastern, we stream this live via Mixlr, MIXLR, so you can grab the app on whatever device or stream it live. You just follow us on Twitter or Facebook or the website, and we put out the link before the show. Click on that, and you can join our little chat room there, so you can send in questions and comments and have issues and all sorts of fun stuff. So noon Central, 1 p.m. Eastern if you're live. Otherwise, enjoy it on demand wherever you get the shows. We love to hear from you guys. And joining me on the program today, my usual cast of characters, plus one, starting off in the realm of, actually, he's not in the palatial corner office. He's once again moved hither and yon, this time back to scenic, the options mecca of Oklahoma, where we welcome on formerly corner office, Mr. Russell Rhodes, the senior instructor over there at the Options Institute. Russell, welcome back to the show. And you just love talking VIX from Oklahoma, from Sooner territory.
I do love talking VIX from Oklahoma. It's quite an exciting view of like 90% humidity and 100-degree weather.
Nothing says volatility like some Sooners and some 90% humidity and 100-degree weather. Also, in that little tinny voice you heard in the background there means we are joined by none other than the greasy meatball himself, Mr. Mark Sebastian from Option Pit, as well as from Carmen Line, as well as from the business show. He's added yet another notch on his old business belt. Mr. Greasy Meatball, welcome back to the program, sir.
Welcome. You know, what I like about doing the business show is I get to interview real celebrities like, you know, we like Donald Trump. We get to have, a guy that owns a general store. The head gold, the head gold analyst for J.P. Morgan, Prospector Dan. All sorts of things. He actually might be. I think he's going to be making a return visit this week. And for those of you who don't know, we record the business show. We've got like 4 or 5 in the can already. So. There's some funny ones coming out. I know Mark's got tons of enjoyment ahead of him. And, I think we're going to have Ben Bernanke or maybe even Janet Yellen on one of these days.
Don't forget Jimmy John from Jimmy John's
fame.
We
did have Jimmy John's on. Yep, Jimmy John Lebitard came on. And that was a blast. So...
Yes, I believe in the show description it says speaks to world powers and it's great celebrity. So there you go. Check it out for all the latest with world powers and global celebrities and all sorts of other fun nonsense. And speaking of fun stuff, we got a great guest. So let's get right to it and dive right into our Volatility Viewpoint segment.
It's time to welcome thought leaders from throughout the volatility trading world. It's time for Volatility Viewpoint.
I love that little tune. Don't get to use this segment often enough just so I can hear that little transition. You can never have too much money for nothing in any show that you do. All right, welcome to the Volatility Viewpoint. Like the name implies, this is indeed the portion of the program where we bring on people from throughout the realm of volatility, researchers, traders, practitioners, all of the above, and we proceed to pick their brains for the benefit of you, the listeners. Today's guest is a newcomer to the show and indeed to the network. He is the CEO of Accushares, Jack Fonss. Jack, welcome to the Volatility Views program.
Afternoon, and thanks so much.
All right, Jack, as we are wont to do with all of our first-time guests here on the show, why don't you go ahead, give our listeners a little bit of an overview of your background in the world of volatility and how you found your way to becoming the CEO of Accushares.
A long story. So the group of us that founded Accushares came from the institutional derivatives market, so corporate derivatives and the like. So a lot of us are new to the ETF, ETP space. We joined forces and hired some guys that were longtime ETP platform guys and put Accushares together. So, I guess the big theme of Accushares is we strive to be different than I think most other people in the vol ETP space. And that I think most people approach vol ETPs as, I've got a trade idea or a strategy, and I'm going to launch a fairly conventionally formed ETN or ETF. The approach we've taken is to focus on market structure first. That is, what can we do in the market structure realm, and try to bring some things from the institutional market arena and import them, if you will, into the ETP space. And so we focus on market structure first and really trade idea and index kind of second.
And since you mentioned your founding team there of the Accushares, I want to mention at the top here. You guys, obviously, when you launched, and it was very closely linked to Professor Whaley. Obviously, Professor Whaley closely linked to the VIX itself. I'm just curious, give our listeners an update. Is he still involved with Accushares, and what is the status of that relationship?
Because we've been through some changes and we're relaunching and launching, his involvement in the company is a little less than it was when we launched.
Just wanted to clarify that because I know he's been so inextricably linked to you guys since the earliest days. That was certainly the first I heard about your product well over a year ago now when Professor Whaley was doing the rounds and really kind of speaking to it. In fact, the initial kind of pitch I received on the product, an initial kind of approach I had on this before it took its current incarnation was that, you guys were attempting to solve some people debate. I know if we had Jared on here, formerly of Condor Options fame, he'd debate if it's a problem or not, and others would as well. But effectively, the issue that disenfranchises popular volatility ETFs like VXX, which is, of course, that roll yield issue. People who may not be cognizant of how that product works and the term structure of VIX futures and how that impacts a product that rebalances as frequently as VXX, they might just buy it and try to set it and forget it in their IRA or something like that and sit on VXX for a year or two, which is probably one of the worst things you could possibly do as a trading idea. So trying, a laudable goal, which is trying to come out and have a product that attempts to remedy that in one fell swoop. You guys ended up kind of pivoting a little bit from that. So maybe let's start there. Talk a little bit about the product in its initial kind of conception phase and how you ended up with kind of the dual structure that you have now, of course, VXUP, the VIX up, and the VXDN, the VIX down products that you have now.
No, good question. So we looked when we look at the ETP world, we see. I think you can argue that the funds themselves, the shares or the notes, are fairly simple in their own transacting. That is, they don't have distributions. They look and trade more or less like anything else. So they can be deceivingly simple at the surface. What is going on behind the scenes is all that you mentioned, which is you're transacting in a series of VIX futures, which are rolling on a regimented schedule, which has all sorts of performance and feedback implications. What we've done is we've tried to get rid of the futures transacting complexities behind the scenes, which introduces some complex term structure issues that aren't necessarily intuitive to the range of people that I think would like to be in VIX. We got rid of that and effectively made a fund which is based simply on the cash VIX fund, which would be an algorithmic or formulaic. So while I think our funds look a little bit complex on the surface in that they reset in a particular way and they distribute out a cash amount based on what the VIX has done, they do get rid of all of the complexity behind the scenes with the futures rolls and having to know where I am in the term structure and which contracts I'm in. So it's a trade-off that we've made. I still don't think we've won the battle yet.
Yeah, it is an interesting thing. That's certainly, if there's one way I could describe your product, I think complex is a fair description. I know when it first launched, we made a good effort to make our way through all the way the different distributions work on the program here. We got most of the way through it, but it was indeed an interesting challenge, to say the least, of the different products and the way they have distributions to each other. Distribution on the 15th, I believe. There's a lot of distributions going back and forth, which I think to the average person coming in, they may look at that and say, "Wow, this is intimidating." But you're right; it is attempting to solve a problem that is even more intimidating. So perhaps the solution in and of itself probably has to be a little bit intimidating. Walk us through. It's been a little while now since you guys have launched. Walk us through what that time frame is like. I know the product launched with a lot of eyeballs on it, as any new VIX entrant into the space typically does, particularly one with the pedigree of your product that had a lot of interest in it. And so walk us through how that initial fury of people coming in and really looking at the product, a lot of interest, a lot of volume, then it kind of trailed off a little bit. And so walk us through that process and what it's been like trying to engender interest in this product.
Sure. Let me start with the reboot that we just did, and then work backwards, because the reboot might be very relevant, and quickly walk backwards in time. So the reboot, we effectively rebooted or relaunched the fund, I guess, really effectively yesterday or the day before yesterday, in that we borrowed the CBOE's weekly VIX time schedule regime to, I think, make things a little bit more intuitive. So now you've got a weekly VIX expiring on every Wednesday and having a last full trading session on every Tuesday. So what we're doing now is shortening the term structure that would have been embedded in either a discount or premium in our shares, and shorten the term structure such that now the fund does two things it didn't do before. First, we reset our exposure or delta to the spot VIX at the close of business every Tuesday. And we've aligned the distribution. So the fund continues to have a regular monthly distribution, but that regular monthly distribution occurs on the third Tuesday of every month. So your point is well taken, in that before, I think we really weren't coupled with for certain reasons we weren't coupled with what was going on in the futures market. Now we've really kind of bit the bullet and said, why don't we just align everything up? And really, it's borrowing from the fact that the weeklies launched, I think, back in July after we launched, and then options came on in October, and now sort of I think we're seeing sort of good activity and good pricing. We really borrowed that time schedule again without having to trade the weekly futures because the fund is still algorithmic and effectively liability hedged.
That's an interesting point because you're right. You're attempting, in effect, to try to replicate what's going on in the actual cash spot VIX. And so it makes a certain amount of inherent sense to try to accelerate that distribution process, particularly now with the advent of the weeklies. Those products are gaining a lot of traction. And, they're doing a lot of volume. We talk about them on this program every week. So much volume moving there, so much liquidity there. It makes sense to, A, try to get some of that involved in the calculation, and also B, if you speed up the distribution, it just inherently makes the process of attempting to deliver that spot VIX, a little bit easier, I would think, than trying to do it on your old distribution schedule, which you're right, you said wasn't really linked to any of the traditional volatility product schedules you may be used to.
Exactly. And where we're hoping to get this right, which I think could be really important for really the range of volatility players, is for the investor or trader who's trying to do an outright transaction. We've got a spot VIX outright position, which can be taken on both the long and the short side. Given that we've tightened up the resolutions and we're having the deltas reset on a weekly basis for those traders that are trying to do our shares against something in a basis, let's say in particular in a cash futures basis, while they're trading that during the week, there should be some interesting trade opportunities in where our shares are trading, which again, our distributions and our NAVs are going to be based on the spot, and that weekly futures, which the fund is resetting to now. So I think we really could meet two pretty good sets of demand: the guy that's looking for cash responsiveness and the guys that are looking to trade a cash weeklies basis.
Speaking of meeting demand, obviously when you create a product like this, VIX up and VIX down, there's a clear and demonstrable use case for VIX, and you see it reflected in the option flow as well. Not a lot of people, maybe except this week, notwithstanding, not a lot of people really lining up to gobble up the VIX downside or the put side of it. People usually come to VIX for that speculative / hedging utility to the upside, usually in the calls. So you guys, in the initial concept of the product, I know you had to try to find some way to incentivize the VIX down holders. I think at the time you arrived on, I believe it was a 15 basis point distribution. Is that still the amount, or are you still kind of trying to play with that to try to incentivize more people to come and play in and hold the VIX down?
That is still the amount. So above and beyond that, to the extent you've got a contango or curvature that, again, people are trading that basis, that futures versus spot basis. What we believe we've now done is we've shortened that basis such that instead of being a 1 month, 1 month roll to roll when we're rolling monthly, if we're rolling now weekly, that basis is now, where's the next Tuesday or Wednesday weeklies trading versus the spot number. So if you line up that contango, which I think we've been looking at that contango number in the weeklies versus cash, and we see that number between 2 and 3%. The daily amount, which is the 15 basis points per day, amounts to about 1% going in the other direction. And the other thing I think we were probably not successful enough getting the story out is what I would describe as a natural VIX futures cash basis number, in that RETP is the only one that's calculating its NAV and doing its distributions on the actual cash number. What we find is when we look at where the cash number lands vis-a-vis futures at any point in time, that cash number pretty much always sits below. So it's something on the order of 1.5% to 2% below the the VIX futures number. So we think people have somehow made the mistake expecting the cash number will always land on the futures number. And in fact, what we see generally, even when there's no time left to the future, is the cash number generally still sits below. Something on the order of 1.5% to 2% below the futures number. So when you factor all those bases in, we think that the premium and discount in both share classes should be a lot smaller, and things should look more normal to both the cash, the guy who's looking for the cash spot access, and the guy who's looking at the basis.
And Jack, how well do you guys, with these changes, how well do you expect VX up and VX down to correlate to VIX itself, their movements and whatnot? Because initially your goal had been to try and really recreate a cash VIX ETP, create that. And, you know, it ended up correlating, in my opinion, more like a VIX future. Where do you foresee these changes? Is this going to get you closer to the holy grail, or have you guys kind of dropped that goal and you're really going for something that's going to be more like a tradable VIX future with just a clear understanding of how the ETP, you know, of the daily decay and how much it's actually costing? So
right.
What's your goal?
So the answer is, I think the answer is better with a more narrowly defined goal. So we expect. We certainly expect the NAVs and the distributions will be based on the spot, on the cash number. That's just really the mechanics of the way the fund works. We expect trading prices because people will certainly be trading the shares versus, let's say, versus the relevant weekly VIX futures contract. We expect the trading prices to be informed by you know, where is spot relative to that weekly contract, and let's say that number is either measured in points or percent. Net of that, though, one should figure in we've got a daily amount which is docked or deducted from that up share. So let's say that's about 1% per week, and we're a pretty big believer in that the cash futures number is about 1.5%. So if you add up, if you were trading our VXUP, for instance, I think you'll be looking at the contango, netting out 1% for the daily amount, netting out something on the order of 1.5 to 2% for the cash futures basis, again, because we're the only kind of native cash instrument. And I think when contango is in the neighborhood of weekly contango in the neighborhood of, call it, 2 at 5, we expect our premiums to be pretty small. So that is, it will look, the share price should look pretty intuitive on a cash number and should be pretty responsive to the cash number. If we have some big either backwardated or contangoed weekly numbers, we would expect the premiums to start to come in above and beyond those levels. So if we saw numbers that were in the 5 or 10% range.
Okay.
I'll answer the other question, which I forgot on what we expected when we saw the product, when we launched the product originally, was if you take that same 15 basis point per day number, that amounts to, using 30 calendar days, something on the order of 4.5%. And because we didn't line the dates up, we expected to leave some residual, again, basis in all the expiries. We distributed on a different day than the VIX futures settle. We always expected VXUP to probably trade about 10 points or 10% cheap to the futures. The funny thing is it almost never did. I think it's just the way that people walk into an ETP and they think that it should work, and that we tried to get the story out. I think that it should trade cheap to futures, and it really didn't. It kind of traded right on the screws, which meant you kind of built a premium up, and then the responsiveness measuring the price, it became a bit unglued.
Speaking of that performance aspect, obviously this is a critical week from a VIX performance perspective. VIX Cash was kind of on a tear starting last Friday and coming through to this week. We saw the VIX Cash number itself rallying, I hate to say percents of percents, but from peak to trough, about a 50%, from about the low 15s up to about 22, nearly 23. So walk us through what kind of performance did we see in the VIX up this week? Did it match that roughly 50% move, or was it somewhere a little bit more muted? We modified the fund right in the middle of the week, so I think we did see
excellent timing,
I think we did
see pretty good responsiveness. But yeah, the amendment that I described, which was aligning the calendar entirely with the weekly schedule, became effective on the 16th. So I think we had some adjustment going into the distribution date and that amendment. So pretty responsive, but I think that the story will be told from this point on.
And since obviously it's a very, very new change, but you're expecting obviously these changes, like we mentioned, kind of maybe increase that responsiveness overall. And also, is this kind of reflected in some of the feedback you're getting from some of the institutional community? Do you think this is going to really accrete a lot more volume to the product going forward?
We certainly hope so, and it is very much in response to a lot of the institutional feedback we got, in that the more closely we really our goal in many ways was to make their lives easier, was to make the guy that's trying to make a market and who's looking at it, who's trying to align it with his other tools. So it was really a lot of that feedback was important to the amendment.
Now, I do like the way you guys are putting the fund out there. You don't really make any bones about it. You say very upfront in your prospectus, you say, these funds are not appropriate for you if you do not intend to actively monitor and manage your holdings in the funds before and immediately following each fund distribution date. So it's a very healthy. It's very strenuous, certainly from a disclaimatory language perspective. It's pretty strong, but it gets that message across, because that's not what this product is for. And even though people are starting to get the message, you see that message in the broad media even a lot now when they talk about, let's say, a VXX, they'll usually put a disclaimer in there somewhere saying, hey, this should not be held over the long term. This is a short duration product. But still, there are a lot of people who see that and then those similar type products as just straight up surrogates for VIX, and they could buy it and hold it and forget about it. And as we've said, that's kind of a dangerous path to go down. So I'm glad to see that you guys are taking the opposite approach and being straightforward at the onset and saying, hey, if you want to buy and hold this thing, perhaps look elsewhere.
No, yes, thank you for that. That is what we do.
Well, I noticed at the onset of your products, you guys had a lot of plans to take this methodology and expand it to a lot of other products. I think you were talking crude and metals and the ags and a bunch of other commodity products. Obviously, things probably got put on hold a little bit as you were revamping the initial primary flagship product. But now that process is done, are you guys still looking down the road to other commodity products? And if so, what's the time frame for that?
We are. So the time frame for a crude product is in the very, very near term. There's a prospectus in final form, which is out there and readily available. The big advantage we have in the format we use in this Accushares, what the NASDAQ calls their paired class shares format, is that it does a couple of major things. One is a lot of the stuff that the SEC is challenging over, and that they're looking at derivatives use in ETPs, they're looking at market interconnectedness and kind of under varying levels of liquidity that goes on in an ETP, whether it's at the primal share level or at the underlying level. We solve some of those problems by not relying on certain things. As soon as you're not trading assets, there's some fun simplicity and some really big tax advantages that come out, because you're not really spending a lot of profits and distributable gains that have to come out in a K1. We eliminate all that, and we have different indexing opportunities, because we given that it's liability hedged, we don't have to hold the underlying. So the crude is going to be the next thing. A couple of things will follow on from that. I hope one or two more vol products that, again, hopefully will be super responsive to what we're seeing and what we're hearing. And then we're launching an initiative which is out there, which we've called ETF 2.0, which is a hybrid, really, of what we're doing in what we call pair class shares, which is the way our vol fund works today, and what a conventional ETF does. So effectively, if you can imagine merging the two worlds of when I can hedge a fund with its share classes and liabilities, let me do that and use this ETF ecosystem concept. But when volumes and flows don't line up, I'll go out to the external market and I will access cash securities and futures and options and the like. So that I think is the future of where Accushares is going.
Well, thanks for giving us this deep rundown into all things VIX up, VIX down. We've talked about your product many times on the show, so I'm glad we could have you guys come on to kind of give the other side. We've talked about the complexity and a lot of the other issues. I think you've tried to address some of those with this current restructuring, so I'm looking forward to seeing how some of that plays out in the marketplace. But before we go, Jack, if some of our listeners are intrigued by what you're saying, they want to learn more about what Accushares has to offer, where should they go? What should they do?
www.accushares.com.
There you go. Easy enough. That's ACCU and then just shares, listeners. So it's pretty easy. Well, Jack, I'm glad we can have you on. And again, we're looking forward to watching how this plays out in the marketplace. We love, selfishly, for our own selfish perspective, we love to have more players in the volatility space to talk about. So if these products gain traction, that's a good thing for us to have more things to talk about. So we're looking forward to seeing how these play out, and we'll have to bring you back on again down the road to talk about those developments in a lot more detail.
That'd be great. Thanks so much.
Great. Thank you. All right, and that's going to do it for our Volatility Viewpoint segment. And now we're going to keep on rolling with the show right on into our Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review. That was a fun conversation. I know we've wanted for a long time to have the Accushares guys on. We've taken some shots at their products, but we've given them a fair shake, I think, too. And the complexity is certainly an issue. They're trying to address that. I think in some ways the increased distributions may make it more complex, but if it ends up doing a better job of replicating the underlying VIX product itself, then maybe it's a win in the long run. We'll have to wait and see, because that the truth is in the volume at this point. And if volume accretes, then these changes maybe are for the best. If not, then we shall see. But interesting stuff nonetheless. Speaking of interesting, it has been an interesting week from a volatility perspective. As I mentioned in the Volatility Viewpoint, volatility kind of off to the races. We were saying kind of on last week's show that it seemed like the market's response from a volatility perspective to all of the things on the very near-term radar, in particular FOMC, which we had this week, and Brexit coming down on the 23rd. It seemed a fair bit muted, all things considered. Volatility was still fairly low. VIX Cash still very low. Then the futures weren't really pricing in a heck of a lot of move. It was starting to creep up, though. The VVIX was getting up there, and a little certainly on Friday than it was on Thursday. And then, of course, come into this week, and we see just the incredible move we've seen over the course of this week. It's been, I'm sure by now, listeners, you've seen it written up in just about every big publication, the biggest X% week in VIX history, et cetera, et cetera. A lot of crazy days out there. Ironically, Monday, the 50th best day from a percentage upside move here in VIX, yet only the 1,085th worst day for SPX. So a little bit of decoupling cooking on out there. But there's a lot of fun stuff going on, a lot of cool stuff still to talk about. Of course, as we're recording this, right about 12:30 Central on Friday, VIX Cash still hovering right around 1960 level. So clearly, post-FOMC, still some concern in the air as you approach Brexit. So that said, let's turn our attention now to, let's start with Mr. Rhodes. He was a little quiet during the Accushares, so we'll give him a chance to talk now. Mr. Rhodes, a crazy week. I'm sure a lot of stuff has been catching your eye this week, so catch us up on all things that have been on your radar this week.
Well, I don't want to beat you to the punch because I know this is something you're going to talk about, but we did great volume Monday or Tuesday this week in VIX options, but we didn't do record call volume. So either, some smart folks are trying to take advantage of high volatility to get, some short volatility positions on. And I know that you're going to highlight a lot of put trades. That's really what caught my eye was when we did that third busiest day ever, that the call to put ratio was only like 2.5 to 1 or something along those lines. And it was relatively tame. And I even looked at the call to put ratio when in the top 10 days, and it kind of fell at the bottom end of that as well. Top 10 volume days, and it kind of fell at the bottom end of that as well. So, either people are getting smarter about fading spikes and volatility, or they're looking hard for ways to make money in this market, and they think that's one of the ways to go about doing it. But that was something that stood out to me, and it's kind of interesting that I'm talking about people looking for lower volatility in a week that the headlines are all about higher volatility.
It is kind of weird. I did kind of notice a similar trend. You'd expect certainly over the past 7 days, the lion's share of the narrative in volatility has been to one direction. You'd expect when you have that kind of unidirectional movement in any sort of underlying, the options flow is going to reflect that, and particularly in VIX, which is pretty much 24/7, all calls all the time. To see, you'd expect to see 4-to-1 plus 4-to-1 calls over puts, and we didn't see that. In fact, this week was fairly back. As we're recording right now, some of this, of course, is because some of the calls have come off. We've rallied people taking them off, but still, right now, open interest right now out there in VIX, only 2-to-1 calls over puts. That's pushing record low territory, at least from a normal trading range. The average lately has been just shy of 3, so we're actually below the average right now, which is kind of interesting. Again, at least for today. today's numbers, some of that reflective, and of course, people who had calls on probably took them off. Get they're smart. But still, you're right. It wasn't this mass stampede to the upside, which is what we usually see in VIX when it's exploding and the numbers are really popping off. Maybe some of that is the evolution of the audience. They're getting a little bit more savvy. It wasn't like it was super call rich to begin with. So you can't really come out and say, well, everyone already had their calls on, because that could be an argument you could have made, but not in this case, I don't think. So, yeah, I was kind of a bit puzzled by that as well. It's something I want to talk about on the show. Mark, did you kind of notice that as well?
Yeah, I've been noticing lots, but I mean, think about this, Mark. We got the VIX up a little bit, and puts are outplacing calls over 1.5 to 1 today, Mark.
Yeah,
there's been huge action in July puts. Tons and tons of July put buying. There are a lot of people, I think, positioning themselves in VIX, similar to how people position themselves around the fiscal cliff in terms of the Brexit vote. So that's kind of how I think people are positioning and setting themselves up. And so you do see a lot of put buying in July. Really active in the July 15s today. Lots of action in the July 14s and 13s. There were big put 1x2 buyers, all sorts of plays on downside. And full disclosure, my fund is maybe carrying a bunch of VIX puts ourselves, but I think that there is definitely the audience has figured out that you can buy puts and do pretty well when the underlying drops. And I think, and you know, we've talked about this before. I think one of the drivers of keeping VVIX above 80 is people realize the value of owning at the money and out of the money puts in this product, and they don't just dump them, because while the payout has a limited stretch, in that the VIX, the lowest settle is 997 according to me. Some smart guy told me that there was one settle below 10. But you know, if I buy a 14 put, yeah, you know, maybe I can only make $4, but I've got 50-50 odds of it getting below there based on the number of occurrences that VIX settles at. So it's pretty fascinating how I think that downside trading in VIX has evolved over the last 6 months.
Yeah, if there is one narrative to this week outside of the volume explosion, certainly for the latter part of the week when VIX was pretty lofty, it has been kind of all downside all the time. You're right. As we speak today, nearly 2-to-1 puts over calls out there. I am hard pressed to think of another day when I've seen this type of ratio lining it up. Certainly not in a long time out here in VIX land, where puts have led to charge to this extreme. It's pretty much always calls, and in some ratio of calls over puts. So you're right. It is kind of interesting. We'll get to some of that other activity in a little bit. Speaking of activity and your fun trades, I know you wrote up your trade of the week this week in your strategy letter was a VIX trade. You want to run through that really quickly at the top here?
Just real briefly, you know, I similar trade to kind of what we were just discussing. I want to give myself a little more time. I think really July is maybe somewhat fairly priced, but I think kind of the way back end of the curve has real potential to fall. And so I kind of threw out, I liked buying the August 17 puts for $1.20. And, you know, maybe I would spread that if I had to. I could sell like the August 14 puts at 20 cents or 25 and own that put spread for $1. But I like owning the August 17 puts for an 82% volatility and really only $2 out of the money in August. And knowing kind of where VIX tends, assuming VIX does in fact revert back, I really like the trade that I set up.
When's the last time you recommended a VIX put trade? I can't remember.
It's been a while.
I think it has been some time here on the show. Yeah, so that in and of itself should tell you, listeners, that something interesting is afoot out there in volatility land. Looking back at the week that was, as Russell alluded to, was I think, shall we say, an active week from the mothership, from the VIX options perspective, lighting it up. Certainly kicking it off with gusto on Monday, just shy of 2 million, 1.85 million contracts. Good luck finding a lot of other options products out there that will do even close to that. You can add up 10 of them, and you probably still wouldn't get close to that on a pretty good day. So that's just a ridiculous, is a technical term, ridiculous amount of volume out there. Followed very closely on Tuesday, right about by 1.5 million, as we saw all that tumult leading into actually the actual FOMC day itself. Maybe because the FOMC was kind of a done deal already, not as active, right around the ADV of about 500,000 or so contracts. Ticking up a little bit yesterday, about 700,000 plus yesterday. Today looks like on path for a fairly active, but not super crazy. Only about 400,000 contracts haven't gone up so far. So probably be somewhere a little bit north of the ADV by the end of the day, but nowhere near the historic 1.8. Actually, Russell, you said at the top of the show, where does that 1.8 rate in the history of VIX options volume?
It was number 3. We've had a couple of over 2 million days, but it was number 3 for calls. I think it was number 2. No, I'm sorry, it was lower than number 3 for calls. But the 1.8, it was like it just edged out by a few thousand contracts, like the 4th, 5th, and 6th busiest day. But it was up there.
You're thinking of products that do anything close to that, just from a pure contract perspective. I mean, you got SPY and like a handful of others, but there aren't a heck of a lot in that rarefied 2 million plus contract air. I mean, even Apple on its best days, I don't think has pushed 2 million contracts. Maybe it has on some crazy days back in the heights of the $700 Apple. Maybe, but when Apple was all the rage. But yeah, it's crazy time. Since we're talking crazy, Mr. Russell, let's kick it off with our craziest transition. It's time for Russell's Weekly Rundown.
Now, Russell's Weekly Rundown.
Actually, since we're talking weeklies, I'm going to interject really quickly because it was a good week actually for not just VIX weeklies, but SPX weeklies, or month, I should say, have really been on a tear since you guys added those. The Wednesday weeklies in particular, you guys put out some news earlier this week. ADV for the Wednesday expiring weeklies kind of been just off to the races. Obviously, they took off from February when they listed, which was a truncated month. They didn't do that much, but jumped right up to about 63,000 ADV this following month and kind of hovered around the 75s in this past month. At least, actually, not even past month. It's just the first half of June. 105,000 contracts ADV. So things are rocking and rolling out there in the SPX weeklies. That said, Mr. Russell, what caught your eye out there in the VIX weekly options this week?
Well, I'm gonna stick with the topic that you were just talking about for one more second, because I put a blog up last night where I actually had been taking a look at using the really short-dated SPX options instead of trading S&P futures. And because this isn't the show for that, I'm not going to go too much further into it. But you can use some in-the-money, short-dated SPX options and basically get more exposure to the S&P 500 and I think better exposure to the S&P 500 than putting up the margin that you have to for an E-mini contract. So
that's really fascinating.
I rarely shamelessly self-promote, but I'm doing it on that one.
I'm reading, Russell, I'm reading your piece right now, now that you brought it up. It's really interesting. If you don't read this, let's just say that. All right. Especially, and I really like your point on, the fact that in like Russell 2000, you get better liquidity.
Yeah, I'm gonna do one with a Russell 2000 example, probably sometime next week as well. But it just, to be honest, for full disclosure, a couple of years ago, Bittman and I came across a block trade in a deep in the money option, and we were like, we did a little digging and we took a look at the margin requirement for the comparable futures, and with a low interest rate environment where there's not a lot of time value and deep in the money option contracts, if you're trading S&P futures, you definitely want to take a look at the SPX options as well. So, all right, no more shamelessness. I apologize for deviating, but you threw a softball up there.
Yeah,
for me.
Russell, let's stick to deviating your septum.
Deviating my septum. Okay, that's just so I can be prettier for radio.
Exactly.
So the main thing, and I actually tweeted this out earlier, taking a look at my live vol platform and looking at their implied volatility calculations, which uses pretty much at the money options for the weeklies in VIX. You've got about 127 for the June expiring options. You've got 142 for the June 29th, and then you've got 125 for July 6th. The Brexit vote, is between the June 22nd and June 29th expiration dates. And, we were talking about how, there seemed to be some people taking short positions in volatility because thinking that Brexit will end up being kind of like, I like how Mark Sebastian put it, kind of like the fiscal cliff, where once it's done, it's kind of maybe even a non-event. You don't get the volatility you're expecting from it. But the volatility looking at the VIX weeklies is kind of elevated right now going into that vote. So some people are on edge. And what's funny is a couple of days ago, June 29th and June 22nd were basically equal. It's like everybody's so short-sighted. It's amazing how the adjustments don't seem to occur until, like the deer is staring at the headlights or whatever other type of country analogy I can come up with since I'm in the middle of Oklahoma right now.
It's interesting stuff. And that is I was reading your piece on the kind of short-term the options usage versus the futures, and if you can, maybe swap one with the other and get better performance. Because that's a question we actually do get a fair amount now, particularly with a lot of the interest in the commodities and other products. Hey, a lot of futures traders are starting to dip their toes into the options waters, and we get a question a lot of it. Hey, what real good intraday uses can I use for options? Because a lot of the futures guys think very, very short term. They want to get a couple of ticks here or there, and options traditionally not a good way to play that, but if you do it in some nuanced use cases, it can be somewhat effective. So maybe when I'll look at that article again, and the next time I get that question, which I'm sure will be any minute now, I'll just say, hey, go read Russell's piece. Maybe at least if they're interested in index or volatility, that will sate them. Moving on to the week that was, and what a week that was. We kind of summed it up. I'll just sum it up right now. Hey, put Palooza. Okay, we're done. We can go home. That was kind of what the nuance was for the most part out there in the big VIX. The big VIX mothership. And again, when's the last time we said that on this show? So that's interesting in and of itself. Looking at what's going up today, we already talked about some of the big volume numbers of the week overall. Today, again, is a somewhat quieter day. The biggest trade on the tape right now is 20,000, surprise, surprise, of the July 15 puts going up for 30 cents. The puts still leading the charge today, even though the smaller numbers are out there. Yesterday was just a put palooza across the board. Again, July 15 puts going up about 20,000 times. July 16 puts, again, 20,000 times. Paper kind of lifting offers on both of those. Saw also the another lot of the the 16 puts I mentioned earlier. Those were expiring. Those are the weeklies expiring on the 13th. The actual July monthly 16 puts going up about 20,000 times as well. So just gobbling up puts, pretty much across the board. Similar narrative for Wednesday as well. We saw 16,000 of the 16 puts going up again. July 18 puts also getting some love, about 8,000 of those bad boys all in one trade actually against about 8,000 of the July 14 puts as well. So a bit of a funky ratio there, about 16,000 of the July 16 puts versus 8,000 each of the July 14, 18 put spread. Again, bit of a funky fly out there. And then also looks like maybe a bit of a put roll out here at the July 17s, rolling out the long puts out to SEP, doing that about 10,000 times. Either that, there's so much open interest on these strikes that somebody makes digging into all these closed trades, whether they're closing or rolling, a challenge in VIX. The days when it does 2 million contracts doesn't help that. So it could be just an opening spec trade as well. A little calendar here, July SEP 17 put spread. Again, we'll dig in a little more to find on some of that. Tuesday looks like maybe some funky combos were lighting it up to the point of the June. So straight up coming into the fire there, right in the June teeth of June there. The June 20 combo going up looks like about about a total of 30,000 times, lifting puts, selling calls there, doing it for various, looks like about 75 cents on one of them, and about 70 on both actually. So interesting stuff. Don't see a lot of VIX combos going up here in print, so that's kind of interesting. We used to see a ton of those when I was out in the SPX. For whatever reason, we don't see that translating as much, even though there's a similar institutional crowd playing in both. Don't see those going up as often in VIX. And then of course, yet more puts. That wasn't enough puts to sate your interest. About 25,000 of the July 14 puts going up. Paper gobbling those up for 20 cents, as well as about 20,000 of the 15 puts for 40 cents all earlier this week. So again, we can kind of keep this narrative going for a while. I think you get the idea. Puts were in favor this week. Again, seeing the performance we saw out there and looking at the numbers we're seeing in the open interest, perhaps that's not a surprise. It would be interesting. Maybe that's a new paper for you, Russell. Maybe that's something worthy of study, exploring the evolving use case of VIX. Maybe the days of all calls all the time are behind us. What do you think to that if you needed to add to your research queue? What do you think of that idea?
That is going on page 17 of the list.
Up there with the
no, actually, I think that we go through cycles, and you didn't see a lot of short volatility trading in like September, October last year after late August. So I think the short memories start to kick in, and you see more of that, and then when it doesn't work, everybody's on the sidelines for a little while, and they come back in. That might be more of the increased and decreased use of the volatility markets that way, based on how far back our most recent spike would probably be a lot of fun to deal with.
All right, we'll do a quick run through here of some of the hot strikes that I know you got to run, Mr. Meatball. So we'll dive into the crystal ball after that. I don't think any time, unfortunately, for listener mail this week. The hot strikes, the July 30s, still leading the charge. Even though we talked about a lot of puts, it was the July 30s. There about 400,000+ contracts, 406. So the ever optimistic July 30s still on top. Number two, fall off a cliff again to number two, 230,000 of again the July 15 puts there. So this might be one of the biggest OI changes this week. About 30,000 contracts being gained there net. So again, I can't remember the last time puts have rated this highly on the top 10. Again, showing you just what was up this week. 230 again for the July 25 calls. Then number four, the July 16 puts with about just a tick under 200,000 of those bad boys, followed by 192 of the July 23 calls. Then the 22 calls, number six, 187,000. July 26 calls, 142,000. And then about tied for 8 and 9, the July 35s and 27s, which is about 133,000 each. And all the way rounding out the top 10, the July 14 puts, so 3 puts on the top 10. That's probably a new record for us here as well. About 125,000 total, about 5.62 open, about 3.7 on the calls, about 1.8 on the puts. Again, some of those going out from earlier this week, but so that's why OI a little bit lighter. But still interesting stuff nonetheless. And now let's keep on rolling into our final segment, the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, crystal ball once again has made fools of us all. We even our most optimistic forecast did not. We were kind of betting on the muted nature of VIX continuing because it seemed like the market was shrugging everything off. Apparently that changed right after we finished recording, actually as we were recording the show, and then into Monday with volatility catching a bid and not really giving it up. I was on the low end of the range with 15.5. Russell kind of splitting the difference, 16.5. Mark doing the Price is Right, 18.01. Didn't matter. None of us were very well within the mark. That said, Mark S., you were the closest without going over, so I guess I'll give you the dubious honor of going first this week, sir.
All right. Well, here's what I'll say. This time next week, the vote will be over. We'll be sitting through it. However, I think we're going to go right back. I'm going to go on a huge limb here, Mark. I'm going to say 15. 15.
Wow, that is a So you're thinking post-Brexit, it's just we're done.
They're going to slam this stuff down. They're going to vote to stay, and the market is going to. I really predict a face-ripping rally on Monday or on Friday. So when we are talking right now, we'll be in the midst of a 20-handle rally.
I'm going to put that in the notes. 30. I'm going to put that down as face-ripping in parentheses there, so we can add that to your prediction. 15 with a parentheses face-ripping next to it. Looks like the Oklahoma Sooners didn't pay their Skype bill, so we'll have to make a guess on Russell's behalf. What do you think he'd be feeling, Mark?
He's going to be saying he'll want the highest number, so he'll say 18 and a half.
All right, I'm going to put 18 and a half for him because just we can guess on his behalf, and you're stealing the low side. He's getting. I'm going to go. Let's see. We're about 19 and a half. I'll say. I also think, obviously, post-Brexit, unless, something crazy comes to pass, we shall be surrendering a good chunk of this vol. The question, obviously, is how much. I'm going to say a little bit less than you, obviously. I'm going to say we're going to be about a 17 in the VIX Cash, so giving up about 2.5 handles. I think that's a reasonable expectation, all things considered. Who knows? This thing is not going to play out on Friday. That's just the vote. It's going to take 2 years for this thing to be settled out. So there's a lot of devil in the details. If you want to hear that stuff, check out LSFO. We talked about that earlier this week. Very fascinating stuff. But unfortunately, Mr. Greasy Meatball, that music means it's time once again to bring to a close this very fun episode of Volatility Views. Great guest, a lot of fun stuff going on. But before we go, why don't you give us a hint? What's going on in the world of Option Pit as well as Carmen Line?
Well, we've got our big event coming in July. The invite will be in the show notes. You get to see Russell speak. You get to see me speak. Mark's going to host a episode of the Option Block, maybe Vol Views, and we're going to do a live business show, I believe. Should be a great time.
Is Donald Trump going to make a return appearance?
No, but we might get Vladimir Putin again.
Oh, that'd be a good one.
Yeah, I think he's in episode 2, as I recall.
That's right. I forgot about him, Mr. Putin. Was he with the Prospector? Were they buddies? Prospector and Putin?
Putin and Prospector?
P&P. I would sit in for a P&P segment, Prospector and Putin.
There you go.
All right. Thank you for that, Mr. Greasy Meatball. You're now free to move about the country. As for, of course, we lost Mr. Rhodes, but as he mentioned, we do a lot of our data, and our analysis comes from our friends over there at CBOE Live Vol. So check them out. If you haven't done so already, just check out livevol.com, and that's a good way to go. Check it out. And of course, they have that new data shop that we talked about a few times. So if you are indeed inclined to pick up some a la carte data sets, maybe you say to yourselves, I don't need all of the VIX options data. I just need this specific set of months or this year or two here, or these couple of series here. Either way you want to cut it up, head on over to CBOE Live Vol. Just search for them, and you will get access to that. And again, we use a lot of that data here throughout the show, so all these numbers we're throwing at you throughout most of the show, a lot of that comes from our friends over there at Live Vol. So on behalf of Mr. Rhodes and the Greasy Meatball, and indeed myself, I want to thank all of you out there for joining us, including our guest, Jack Fonss. Check him out over there at Accushares.com, ACCU shares, SHARES.com, to learn more about their VIX up, VIX down, if you are indeed so inclined. And I also want to thank you guys for downloading, streaming, and subscribing to the show. And of course, for those of you who can tuning in live as well, we love to see you guys there. Sorry I didn't get a chance to get to any questions. Again, kind of an action-packed show this week. We'll get to them next week. And we'll see you next time for more Volatility Views.
Volatility Views is brought to you by CBOE Live Vol. CBOE Live Vol is the leader in equity and index options trading technology, providing professional and retail traders with the most sophisticated options risk analysis, compliance, and trading tools. CBOE Live Vol offers a broad spectrum of advanced trading technology, including the Live Vol X, next-generation execution platform, and Live Vol Pro, the new standard in options options trading front ends. Visit livevol.com for a 15-day free trial today. And by Russell Investments, the home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.